It is July 21st. Michael Vaughn with Brian Acker in his home office. And Brian, it's the first time I've seen you since the lockdown, but Acker Finley is running smoothly.
98%, yes, everyone's at home, they're doing their work, and it's working out well. So a lot of Zoom meetings, but anyway, in times of pandemic, this is what we do, I guess.
It's getting done. All right, well, let's have a quick review of the funds. Then
Sure.
I have some tough questions.
Yeah, for sure. Our U.S. Select U.S. Value 50 fund looks like it's down maybe 3-4% for the year. So
It was down in April, a lot more than that.
yeah, like almost 25%,
Yeah.
certainly over 20. So we've kind of come back. We haven't made new highs, all-time highs yet in the S&P. Maybe that's coming. But yeah, so we're just behind. But you know, we don't have all the FANG stocks that the market does. So
Well, that's the point.
lower value.
Okay, well, that sort of comes to my question, and it is this. Are we in inflationary or deflationary times?
The market hasn't tipped its hand yet. So the answer that I like to give is the market's on two tracks.
Oh.
So we're going down. So every day we get data out, not only on coronavirus, but also on the economy, etc. So basically, going forward, we're going to have two scenarios. One of potentially two scenarios. One is what we've been in for all along, almost deflationary, 1 to 2% deflationary a year, deflation, and obviously, yeah, somehow we're going to have to pay off all this debt and stuff that we accumulated. The other
Deflationary, if you're expecting deflation, then what? Then you buy FANG.
you would buy FANG, you would buy certainly the US dollar, you would buy anything that has growth to it.
Spotify.
Or Shopify.
Shopify.
Yeah, even Spotify is doing well. But yeah, those names that really have no impact because of the pandemic, right? So they're all online, their businesses are growing, earnings are still going up 30% a quarter, interest rates are now negative. What's the valuation of those stocks? Well, infinity. So that's what's happening. And so if we have basically deflation for the next 10 years, like we did have in the last 10 years, then those stocks continue to perform.
Okay, now the inflation side, and that's what I feel coming with tax increases coming, with just so much money floating around chasing too few goods.
Yes.
What's the inflation trade?
The inflation trade is by far the most seductive for us because it's basically the value trade. So for instance, Canadian oil and gas stocks, anything to do with the economy has fallen literally 80-90%. So the trouble is, you know, the market on this two track, if we continue with the deflation, a lot of these firms are going to go bankrupt.
Yep.
And you know, they're going to be written off or whatever. So that's one aspect of it. The other aspect is, as I like to say, and this is not me, this is probably John Templeton or someone famous, said, you know, when you buy a stock that's down 90%, it can fall another 50%. So again, even though these things look fantastic, we'd love to certainly overown them, we can't, because obviously the market hasn't decided yet which way it wants to go, either deflation or inflation.
Then why not go with the flow and do the deflation? You know, load up on the Shopify's now.
You can, but the valuations now are so expensive.
No.
They just keep on going up. And now we have a whole, I don't know if people have been reading about the Robinhood traders, these young people coming in. I mean, they're buying bankrupt firms like Hertz and moving the stock higher. So what we call FOMO, just momentum trading.
Yep.
I mean, if you're a momentum trader, but you're not offering any services to anybody, like in terms of valuation parameters, in terms of a good company, in terms of buying even a bankrupt company. I mean, who wants a bankrupt company? It's going to go to zero. We all know it's going to go to zero, but it's trading at $6. So that's what's going in this crazy market. But I'll tell you, when you list all the things that are inflationary, and they're happening.
Yeah.
And commodities, when you look at pricing of commodities, they're at the lowest point ever.
Well, that's because China has flooded our markets.
Yes. So we're cutting
Where's the steel come from?
Right. And so basically we're going to cut those ties.
Yeah.
I think that's inflationary. So,
I do too.
so again, you know, you go into any investment manager's shop in the world and they have a list of stocks that they just can't buy. They love it, but they can't buy.
They love them, but they can't buy.
Because you're going to get fired if you buy them. So we try to do as little of these stocks as possible, but I'll tell you, if you want X percent gain, like, you know, 500%, you know, 1,000% gain, that's going to happen in these groups of stocks. It's just, we just don't know when.
Okay, contradiction though. When I look at your top stocks in the U.S. fund, there's Apple, there's Microsoft.
Yeah.
Doesn't that mean you've chased the growth?
Well, what happened is, let's take Apple for example. We bought that stock in 2010.
Oh.
And we haven't bought a share since 2010. So that's 10 years, okay? So we're up 600%, 700%. I don't know, like I don't have the exact number here. Same as Microsoft. When we bought Microsoft, I mean, it was a stretch to call it a value stock, but it was a value stock in relation to the market.
Right.
Again, you know, we haven't traded it. We haven't bought or sold. So those names have been there for at least 8 to 10 years.
And you say you bought them on a value basis.
We bought them on a value basis. But again, all those gains are sitting there. It is the growth part of the market now. Now, what's interesting is, you know, there are now 4 or 5 companies now over $1 trillion of market value.
Yeah.
If money ever started leaving those companies and into, let's call them the commodity cyclical play.
You're right.
I mean, there's not enough market value in the commodity. I mean,
if 10% of FANG shareholders rotated.
Like literally you're talking 500% and 600% moves.
Yeah.
So that's where we are. What I try to say to people is the market's going to tip its hand one way or the other in terms of deflation versus inflation. Yeah. Or it could be a head fake. You know, we could go all deflationary and then back. So again, this is the fun part of 2020. But yeah, so if we can get this one call right, if potentially there is a call, then the performance will be there.
Well, you did it before in 2008. Now, that chart behind you,
yes.
Some people have said you should take it down from the website because you're trailing the
index, yes.
For like 5 years.
Yes, and my response to that is, over the last 11 years, growth has beaten value every year. So again, do you want to continue that growth investing here after 11 years of solid whatever? Now, just a little history. In a normal 10-year period, value should outperform growth 7 of those years.
Yeah.
So we've gone 0 for 11 in terms of value investing. I would even go farther. The market is broken here because, you know, at the end of the day, what should be happening in the market, expensive stuff should be sold, and with that money, cheap stuff should be bought. That hasn't happened in 11 years since 2008. Will that come back? Don't know. Maybe it'll never come back. But I'll tell you, if that rotation ever happens.
Well, the fact that you're trailing the index, but not by that much, I would take the safety personally.
That's, again, you know, you try to make determinations. You know your clients. You know what makes them not sleep at night. So yeah, I'm perfectly happy, and you know, people can, you know, I have a lot of people on TV that raise our track record, but if you knew the market internals of what the market has been doing and what the future potential is, I'll tell you, I'm probably as excited about this market as I ever been in my career.
I'm glad I've tracked you down to the home office, Brian. We got to do it again soon.
Absolutely, Michael. Well, great to see you and hope you're safe.